Hello traders, in the next 10 minutes, everything that I'm going to show you is probably going to change everything you do with Bitcoin. That's not just clickbait, I think that really actually will happen. So what I have amassed here from the website HighBlock is a bunch of statistics based on 5-minute intervals. Now, these 5-minute intervals encompass a bunch of different indicators, but just think about it this way. What we're going to be looking at today, guys, is what effect do different indicators have on the price of Bitcoin? What has the largest statistical correlation to price movement? So what I've done is I organize an entire list of all these different indicators and their exact correlation to price movement on Bitcoin, from lowest amount of correlation or kind of weak correlation to extremely high correlation where you can actually make money using these indicators solely by themselves. They're that good. So let's dive in. If you're interested in statistical insights like this and making it as a full-time trader, definitely join the Discord down below, because I can't think of a better place for you to be than with us in the Discord. Okay, let's dive in. First one. This is one of the weaker correlations, but I want to have a conversation about it. And I also want to have a conversation about what this stat analyzer is right here, okay? So what this is showing us is three different things right here of categories, okay? Hypothesis is just the exact data from whatever I click. Does that make sense? So if I go to, like, let's say, I don't know, the funding rate, and I change the funding rate to like very negative, whatever, and then I hit run, what it's going to show you is the amount of times that that exact thing has happened and the exact thing that's occurred here. Now, guys, the benchmark is every single 5-minute period of the last 2 years. There have been 210,228 5-minute periods in the last 2 years. This is the average price move that Bitcoin has had during that time, okay? So you can see here the average Bitcoin move is very slightly up, as you can see right here. Now, the most important thing, if you don't really want to get to the nitty gritty, the only thing you should be focusing on is number 3, the delta. The delta, what this will show you is how statistically significant is the indicator. So how much more does a certain hypothesis, a certain indicator affect the price of Bitcoin? Okay, relative to just a benchmark. So remember, last thing I'm going to say about this, hypothesis is just what is the exact data, what does exactly price do when we have this setup right here, when the funding rate is this on a 5-minute period. Now, the benchmark is going to be what is the average Bitcoin price move, and delta is just the difference between the two, which is going to really show us the real data. So delta is going to show us if we can actually make money using a strategy. All right, let's dive in. First one, the negative funding rate that I just kind of showed you right here. These are the occurrences. This is every single negative funding rate. Here's what we're going to look here. Here's what we can talk about. There's not that much statistical significance here. I do have to be honest. Typically, price will just rise when the funding rate on Bitcoin is very negative. But it doesn't really seem that strong, because if we look at the delta, it looks really green. Like, yeah, price tends to rise, but the delta is 0.001% higher than the benchmark. It's not that much. I mean, the hypothesis is barely larger. So this means that there is a slight bullish effect when the funding rate of Bitcoin's negative, but it is very slight and really not too much there. It's one of the weaker correlations, I will say, on the 5-minute. I'm going to primarily be looking at 5-minute, 15-minute, and 1-hour change, just information for that. All right, let's go to any positive funding rate above 0.01. Reason I don't want to include 0.01 is 90% of the time, or a very vast majority of the time, the Bitcoin funding rate is just going to be 0.01%. So I wanted to filter out those times, and I did 0.011% and above. And there was 18,000 times. On average, price just goes up a little bit. What does this data tell us? Well, this data basically tells us that anytime the Bitcoin funding rate is quite negative or very, very positive, it doesn't really mean anything. Maybe, I mean, typically it just leads to price kind of rising a little bit, but this is not a large amount. This is not something you can trade. It's not strong. Let's get to something a little bit better now. Binance Futures Order Book, the bid-ask delta. So the ask, also known as an offer, is a limit sell, and the bid is a limit buy. Now, what this indicator is going to tell you is of every single limit buy and every single limit sell in the Binance Futures Order Book, what's larger? If it's larger, it's going to be bids larger. And if it's if there are more offers, meaning more people trying to limit sell, then offers will be larger. Here's what happened. When offers were larger by at least 10 million, you can see that there is a negative effect on Bitcoin. That's just not that surprising. When more people are placing limit sells, price tends to fall. Not that shocking. And you can see that it does have a slight statistical significance that over the next 5 minutes, 15 minutes, price does tend to fall a little bit. This is ranked a little bit weaker though. This is not the strongest indicator ever. Statistically, order book data is actually not as good as I originally thought it was. There's another indicator I'm going to tell you later that is 5 times stronger than order book data, and it's quite interesting. When there are more bids, meaning that there are more limit buys on the Binance order book, price goes up. Not too complicated there. When there's at least a 10 million delta, price just tends to rise. It's really not too complex. And the majority of the time, as you can see for total occurrences right here on the left side, it really isn't going to be that rare that happens. That happens most of the time. And as long as there are more limit buys than limit sells, price just tends to kind of float higher. Not that much, but it just tends to go higher. That's kind of it. Okay. Now we get into something that's better. Again, every one of these indicators that I'm showing you in their statistics are going to get better and better correlated to Bitcoin going up or down. All right. Now this one is a little bit stronger. When the vast majority of Binance accounts are long, so what I mean by that is I saw that at the very tail end of the extreme. So when the most amount of Binance accounts are long in the long-short ratio, this is basically the data. Price goes down. And it's really hilarious that it happens this way. Across the board, price falls. Yeah. So the more people that are long, the more not, because open interest is always 50-50, but this is showing how many accounts are long. So the more people, the more humans that are in long futures positions, it's really bad. And it's really funny that price just will go trade right against you. Now, when the vast majority of Binance accounts are short, look how funny this is. Price just goes up. It really does show that either price is trading against retail traders, or more likely retail traders just make very bad decisions. They shorted at a terrible time. They long at a terrible time. Like you can see here, when every single Binance account is short, they're all just shorting. Price tends to rise a decent amount. As you can see, average change of 1 hour is 0.07%, just about. Average change when everyone's long in 1 hour is about 0.1%. So this is starting to get a little bit stronger. Okay, now let's get to a higher tier, a higher level. Now we're going to start to get into things that actually do really affect the market. Okay, let's dive in. Large short liquidations. This was so weird when I backtested it. I had to check multiple times to make sure that these two things were the case. So when we have a lot of liquidations, there's not that many occurrences, as you can see right here, only 186. Price tends to fly higher. So a short liquidation, guys, it's going to almost always be, or really always be, when price is going higher, the margin of shorts are used up and you get liquidated. That's part of life. That's what we sign up for. So it makes sense that at the time price would be going up. But what this data shows you is price continues to go up a lot of the time. This kind of like hunting liquidations where you're going to get something that happens where people get liquidated and then price just, reverses immediately. The data does not show that. And I've said that before, that you can get these reversals at liquidations. That's not the case. These statistics here of a few hundred, I know, but the statistics are overwhelmingly that when people are getting liquidated in short positions, price just keeps going higher. The pain just continues. So as you can see here, in the next 5 minutes, the average price move was 0.49%. It just, wow. That is a crazy high price move. Now you might be wondering, why is there such a strong correlation? Well, if you think about it this way, there's only 186 occurrences, and this is, I believe, over $10 million of short liquidations in one 5-minute candle. That's what qualifies for this data, if that makes sense. So what that means is this requires a significant price move. When these significant price moves happen, and the massive shorts are liquidated, price tends to keep rising. It's quite weird. Now you're probably curious, but it's even stronger when longs are liquidated. I want you to go look at the 5 and 15 minute here. It's a minus 0.6 and a minus 0.54. when a lot of longs are liquidated over the change of the 5 minute and the 15 minute. For the shorts, it was about the same number, 0.5%, over 5 minutes, 15 minutes, 1 hour. On average, prices continues to rise about 0.5%. Now here, what I can basically see is that there is a very strong effect. It's stronger here, even though the numbers that I use for the threshold's the exact same, just on the other end. When longs are being liquidated, guys, the cascading effect is actually stronger than the reversal effect, way stronger. The average price move over 5 minutes, over 158 occurrences when a lot of longs are liquidated, is minus 0.6%. That is a massive price move on Bitcoin. 0.6% would be, like if Bitcoin's at 50K, then that would be oh no, I have to do math. $300 price move, I believe. A $300 price move in 5 minutes. And remember, these are 5-minute candlesticks. Very, very, very short term. But when a lot of longs are being liquidated, don't buy. If anything, you should be shorting. And it's really interesting that this data is revealing all of these weird things to me that I never thought of before. That it was actually short liquidations and long liquidations that are one of the stronger indicators for you not to counter trade, but for you to target. And once they're hit, you just continue to make money. So targeting is when we see a lot of potential long liquidations, so we short to liquidate them. And then when they begin to get liquidated, just hold. Just hold, because if you look at the data here on average, longs get absolutely obliterated. Large longs do. The strongest indicator I have ever seen, I backtested, guys, every single indicator on High Block. The best correlation across the board, across multiple occurrences that can be repeated multiple times is two things. The strongest thing, the absolute best trade you can take is the global volume delta. So this is all net volume of market buys minus market sells. That's all it is across exchanges, okay? Now, whenever that number is over 10 million, it was recorded here. Now, what do you see? Well, what I see is it looks like across the board, price just rises. Whenever there is net buying in a 5-minute candle of over 10 million US dollars, that means that if there's 30 million market buys in USD, but 20 million market sells, that would be a net buying of 10 million. Make sense? And you can see here that basically next 5 minutes, next 15 minutes, next hour, next 4 hours, price just rises. There's a very, very strong correlation that price just continues to rise. Now, when there is a lot of selling, price just tends to fall. And it's really interesting that price tends to fall the same amount that price rises. It's very similar, these numbers. The net selling over 10 million, it's like they're almost perfectly inverse. It just shows how balanced the market really is when you look at data and how hard it can be to really get an edge. So how do we get an edge here? Because I did promise that. So what I can say is when a lot of people are selling and when those sells are over 10 million, in the short term, you have a very, very good chance of making money if you sell as well. It's so weird that the data presents itself in this way. Because I always thought that Bitcoin was very choppy, meaning that a lot of people sell and they panic and then prices rises. That's kind of the case, but this data is really saying when you get to the short-term trading, the best thing that you can do is breakout trade and trend trade, not counter trade. So breakout trading here would be we see all this selling and then we just sell. Trend trading would be more we see a lot of selling, we wait for a weak retracement a little bit higher, and then we sell. But what you can see here, the best edge that you can get, strangely, is just market buying when other people market buy. It's so fascinating to me that something like that would ever be the case. Because I don't know about you, but when I think about extreme amounts of market buying, I tend to think about market tops, that everyone bought the top and then price falls. That's not really the case with Binance futures. A lot of the time, these large buys, these large liquidations of shorts that are also large buys, price just goes up. That's it. Price just continues to go up. Like you can see when a lot of shorts are liquidated and there's a lot of net buying, price will just continue to rise. And that is the best indicator across any indicator, any statistical significance. This is the best indicator. Now, some insights about this whole thing. It seems like limit order data isn't as statistically significant. Funding rate data, it's just not good enough. Open interest data is good, but it can be hard to measure. The best stuff that you can look at is, I mean, liquidation to some extent, sure, people's historical liquidations, but the best indicator that people are neglecting is volume. And not just volume, but net volume. And when you see these massive rushes of 5-minute volume, even when it's over $10 million bought in a short period of time, price tends to keep going higher. So how do we make money from this? Well, there's a lot of ways you could do it. I mean, something even as simple as after a certain amount of market buying, you market buy, like let's say more than 10 million market buying in a 5-minute candle, you market buy with a 0.25% take profit, 0.25% stop loss, just basically abusing this data. And then you do the same for market selling if there's that amount of net market selling. And you're basically able to do that to, make money. Okay. So yeah, I got all of this basically from this right here. That's why I presented it in the way that I did. The best indicator of all time, volume delta. Oh yeah. And if we go, here to like the very, very extreme, I mean, I didn't show you guys this data, but this is just the less extreme of the net buying. But if we go to the very, very extreme, where this is a 5-minute candle where there's more than, I mean, that's like nothing. There's just not enough occurrences. But this is when there's over $200 million worth of market buying. Look at this. The average price move when there's over $200 million of market buying is plus 1% in 5 minutes. Now, you might be thinking to yourself, well, Bennett, of course price is going to rise when this happens. No, think about it. This is not giving you data of what happened in the past. This is basically saying, okay, there's been over $10 million of market buying in this previous candle. Now we are going to calculate what happens in the next few candles. That's what the data is telling you. So this is telling you a lot of that buying just occurred. What happens from 5 minutes from now? And on average, 5 minutes from now, with extreme amounts of buying, price just flies higher. And you're not going to be too surprised, but when people panic like crazy and everyone market sells and it's just pandemonium, do not market buy. Nope. You should not be market buying. Look in the short term, what happens? I mean, that's 2 occurrences. I mean, sure, but like let's go to 200 million again, negative $200 million globally, which is just a crazy amount of market selling. Don't look at this because that might not be as statistically significant. Look what happens in the short term when everyone's market selling. So I hope that this has opened up a new way for you to think about trends. Now you can also use this high block to do it on altcoins as well, but I just wanted to focus on Bitcoin because it kind of runs the market. It runs everything in crypto. So with that, I hope that you've learned something really important here. And if anything, maybe this kind of shows you that in the short term, do not counter trend. In the medium term, long term, maybe. But in the very, very near term, if you are going to make a successful scalping strategy, it does look like momentum based. It's a little bit stronger than oscillator based, meaning momentum is like volume, moving averages, blah, blah, blah. Oscillator is like RSI. Okay. That's going to just about do it. If you like what you heard, join Highblock. I'm going to give you the link below. They have a 60% off deal. And you can also join the Discord. And I'll see you there. Happy trading, guys.